This is chartingwealth.com for Wednesday, the 28th of September, 2016. Markets are down. Oh, you may have heard that the market was up today, 0.61%. But as we look at our two-day candle, we see that we have a solid red down candle with a bottom wick, which means more down movement. Markets crossed over, going down all the way back on the 24th of August. And they slid sideways for a while, dropped big, gained a little in mid-September, and have now turned over and are moving down yet again. Derivative oscillators lost a little bit of its energy, but our MACD and our signal line continue to bear down on our bigger charts. Our weekly chart is still down, strong trend line. Folks, when you see the weekly trend line and the two-day trend line crossover going down at the same time, that is the best entry point you can find. If you're a long-term trader, that is exactly what you want to look for. Now, let's talk about where things went intraday on the total market. IYY is a total market index fund. It tracks the whole stock market. What we saw happen was some up movement in the morning and a little retracement in the afternoon. Check this out, though. Our derivative oscillator actually gained downward momentum throughout the course of the day, even though the market was technically up. That is showing you that that up movement is not sustained by the derivative oscillator. Now, the MACD is continuing to be negative. It crossed over going down back on the morning of the 27th. That is the day that I'm broadcasting this to you for the 28th. So it went down this morning. And again, it flipped over going down. Derivative oscillator did at about the same time. So pay attention to that. Those of you looking for jumping in points, if you did not manage to jump in back on Friday on a down move, wait until the green candles go to red on our Heiken Ashi candlesticks. If you don't know what a Heiken Ashi candlestick is, you need to take our online training at either Charting Wealth or at our YouTube channel, chartingwealth.com, or the Charting Wealth YouTube channel, or you can also find that same one recorded at iTunes. Now, let's move on from the total market. We're going to jump back to our two-day chart, and we're going to go to the SPY. It was up 0.62% for the day. Again, we have a red down candle with a long wick, a little bit of upward movement on the two-day candle that closed out today. That is Tuesday. So just a tiny little wick on top. Otherwise, all down movement. Derivative oscillators lost some of its downward speed. MACD and the signal line are still down. MACD is actually sliding sideways while the signal line is continuing to move down. If we look intraday, what do we see on our 4-hour chart? It crossed over going up back on the 20th of September and has not yet crossed over down. So we don't have a confirmed down move yet. We're just waiting to see that happen. Once that does occur, you'll have your jumping in point. Those of you who like to use the Heiken Ashi candlesticks may have jumped in back on Friday. You did pretty well for yourself, particularly on all that down movement on Monday. And again, those of you who are listening for the first time or don't quite get everything we're talking about, sign up for our newsletter at chartingwealth.com, and guess what you'll get? One of three things is our How to Read a Stock Chart video. You'll get a link to that. Listen to that. It'll cue you in very quickly. Okay, back to the two-day chart. Then we go to the Qs. What is that? That's the NASDAQ 100. It was up almost 1%, 0.99%, which erased a lot of the down movement on our two-day chart. What we have now is a spinning top. Do you recall what we told you on the weekly chart? That in fact, the NASDAQ 100 never rotated over on the weekly chart going down like the S&P 500 and the total market did. It continued to be in an upward movement. The two-day trend line had rotated over going down back on the 26th, but it wasn't enough power to bring the weekly over. Now it looks like the MACD may be getting ready to rotate over going up. We'll just have to wait and see. Hasn't happened yet, but remember, all things being equal, the market always moves in the direction of what? The biggest chart, and the biggest chart is the weekly chart. All right, let's look intraday to see what happened. And we saw not much movement at all, pretty much a doji in the morning, which means indecision in the morning of Tuesday, the 27th, and then up movement in the afternoon. We did cross over going up. So again, the weekly is in an up move, the 2 days in a down move, the 4 hours in an up move. What does that mean? Well, it doesn't mean you really have the ability to do much of anything in the Qs at this point until you have a trend established on your charts that all flow together. So again, continue to watch the Qs, pay attention to what's going on, and we'll see what develops in the future. Lastly, we're going to jump into GLD, which is gold, down 0.73% for the day. Gold had been going up over the prior two 2-day candles on the 21st and the 23rd, but the candle ending on the 27th is a red open box down candle, big wick on top. However, the derivative oscillators continue to gain energy, but we haven't had enough energy to cross over going up on the MACD on that 2-day chart. Let's take a look at the 4-hour chart on gold. What do we see? Gold continues to move down. This 4-hour chart is prescient. It started working again. If you remember, toward the end of last year, it stopped working because the market was sliding sideways, but it has been a good trading chart for the last many months. When it crosses over going down, tends to go down. When it crosses over going up, market tends to go up. We haven't had it cross yet on the 4-hour chart. That may be coming soon. Folks, that's where we are as we end the day on Tuesday the 27th, go into Wednesday the 28th. We love to hear from you. If you have questions, problems, concerns, let us hear from you. And also, glad to announce we published Chapter 3 of the book, Charting Wealth. So please go listen to that. Give us some feedback. We'll be working on Chapter 4. This Chapter 3 is all about emotions. It's the number one thing you need to be able to control after learning how to read a chart. Once you learn your charting basics, emotions is what it all comes down to. This is not gambling. This is controlling your emotions and reading the charts and following what they say. Well, folks, and it sounds simple, it's not. So please listen to that. Let us hear from you. You want to help us out? Go to iTunes, give us a 5-star rating, say something nice about us. Also, go to Charting Wealth on YouTube and subscribe. Thank you so much. God bless. Hope you're getting a lot out of this. We love bringing it to you every single day at chartingwealth.com.